Hey everyone, and welcome back to the channel. Today we're diving into Pubmatic, ticker symbol PUBM. The stock had declined over 50% in the past year, so we might have an opportunity. Here is the video format. First, I'll explain what the company do, then I'll talk about their business model. After that, I'll talk about some key financial highlights we should consider. Lastly, I will talk about institutional and insider trading, competition, and valuation. Everything I say is not a financial advice, so please make sure you do your own research. So let's start with understanding what the company do. Pubmatic help websites and apps make money from ads. When you visit a website or open an app, you often see ads. Those ads don't show up randomly. Behind the scenes, there is super fast auction where advertisers compete to show you an ad. This happens in milliseconds while the page is loading. Pubmatic runs the auction. They work with publishers, which can be websites or apps, and they help them to sell space for ads. At the same time, they work with advertisers like brands who want to buy the space from those websites. Pubmatic is like the middleman who connects the two sides using smart technology. They make sure the ad that gets shown is the one that pays the most and fits the audience in the best way. Pubmatic takes a cut from those ads that are being displayed through them. They typically charge between 10% to 20% every time an ad is shown. It seems like what makes Pubmatic stands out relative to their competition, which we are going to discuss later, is they build a vertically integrated tech stack, which means everything is optimized and controlled in-house in Pubmatic. Now let's talk about their financials. Let's start from the revenue. You can see that the revenue was around $148 million back in 2020. In 2024, revenue is about $291 million. That's a compounded annual growth rate of 18%, which means on a compounded basis, the revenue had grown 18% from 2020 to 2024. Now, if we're going to consider the gross profit, you can see it was $107 million and now it's $190 million. You can see that the gross margin was dramatically high back in 2020 and 2021. It was around 74%. And now in 2024, it's 65%. Actually, it dropped to 62% in 2023 and it improved a little bit in 2024. But we consider 65% of gross margin. That should be considered solid for every company. Now, if you're going to look at the operating expenses, you can see it's growing as well. In 2020, the operating expenses was about $75 million. And in 2024, it's around $186 million. That's a compounded annual growth rate of 25%. So you can see that although the revenue is growing year over year, the operating expenses are growing faster than the revenue, and that leaves them with a smaller profit. We can look on the profit, which is $26 million back in 2020, and now in 2024, it's $12 million. So the profit is becoming lower and lower because the operating expenses are becoming higher every single year. But although the profit is decreasing, they still generate cash from operations, and that's the most important thing. Because when you want to know if a company can cover its expenses, and I'm talking about cash expenses, you should look on cash from operations. So you can see that in 2020, they had $24 million cash from operations, and in 2024, it's $73 million. Over here, we can see as well, it's decreasing year over year. You can see over here that in 2020, it was $87 million, and in 2023, it was $81 million. And that's not a good sign, but they still have enough to cover for everything they need, and they have enough cash to invest back in the business. Also, it's important to mention they have no debt, and that makes their risk profile lower. Major institutional investors like BlackRock and Vanguard holding positions in Pubmatic. That's usually a sign of confidence because Pubmatic is still a small stock, and to see such big institutions investing in such a small stock, that might be a good sign. But from the other side, there are a lot of insider sales, and a lot of insiders are selling of Pubmatic stock right now. And that's not such a good sign. Now let's compare Pubmatic to one competitor, which will be Trade Desk. So let's first understand the difference between them. Pubmatic runs auctions, and they do it on behalf of their publishers. Publishers can be websites or apps that have space for ads and they are looking for advertisers. So Pubmatic help publishers to sell their ad space for advertisers. Now let's compare that to Trade Desk. Trade Desk work with advertisers. They help advertisers to find places to advertise their ads. Pubmatic and Trade Desk are working in the same industry, but each one is in the different side. Pubmatic help publishers and Trade Desk help advertisers. Now we understand the difference between them, so let's compare them. Let's start by looking on some important ratios like price to sales ratio. On the right side, that's Trade Desk. Trade Desk has a price to sales ratio of around 17 as of now, while Pubmatic has 1.6. That's dramatically lower as you can see. Next, we can compare the price to free cash flow. Trade Desk has a price to free cash flow of 62. That basically means that the market value or market cap of Trade Desk is 60 times greater than the amount of cash that Trade Desk is able to generate and is left for them after they covered for all of their expenses and it's free to invest back in the business. While Pubmatic's price to free cash flow ratio is 8.5, and again, that's dramatically lower. The difference between those two can indicate that the market has more faith in the potential of Trade Desk over Pubmatic. Next, we can consider the gross margin. Trade Desk gross margin is 80% and Pubmatic's is 65%. That's better for Trade Desk, obviously, because they keep more money on each dollar they sell. Now, if we are going to consider free cash flow margin, we can see Trade Desk is better as well. It has 26%, while Pubmatic has only 9%. So we can see from those two that Trade Desk profitability and the ability to keep cash from every dollar they sell is better than Trade Desk, but not dramatically better. Lastly, one more thing we can consider is the book value per share. That basically means if a company gonna sell all its assets and then they're gonna pay for all their liabilities, that's their book value. So we can consider it just to have some kind of understanding. We can say that the true value of one stock of Trade Desk is $5.9, while actually Trade Desk stock is trading at around $50. Now, when we look on Pubmatic's book value per share, we can see it's 5.8, which is much closer to the actual price that Pubmatic's stock is trading as of now. So that's another way of trying to understand if a stock is more expensive or cheap. So we can say that Pubmatic is trading at a much closer price to their book value as of now. Last thing I wanted to consider is their valuation. I've took their free cash flow. I've assumed that they are going to generate around $50 million of free cash flow in the next 5 years. I think that's a very conservative estimation because as of 2024, they already generated more than that. But anyway, if we're gonna think they're gonna generate $50 million every single year, and we're going to evaluate the present value of their future cash flows, that will bring us to a result of around $678 million. The company is trading right now at $530 million. That basically means the company might have an upside potential of around 28%. Another thing I've compared is the price to free cash flow of Pubmatic and Trade Desk and the price to sales of Pubmatic and Trade Desk. We can see that the price to free cash flow of Pubmatic is about 8 and Trade Desk is 62. Also, the price to sales of Pubmatic is 1.6 and Trade Desk is around 17. I was looking about the history of those ratios of those price to free cash flow and price to sales, and I figure out that those ratios was much higher in previous year for Pubmatic. So let's assume the price to free cash flow ratio can go up to 10 and the price to sales can go up to 3. That basically means that their market value can go up to 700 or to 870. That implies around 30% or 60% increase in their values. So there is a lot of indication that Pubmatic is undervalued right now. But from the other side, there is a lot of risk because, as we've seen before, their expenses are growing much more than their revenue. That means that competition is eating up their profit. So although the stock looks cheap, it doesn't mean it really is. Let me know what you think about Pubmatic in the comments below. I hope you enjoyed this video. and I will see you in the next one.